The stock market recently surged to all-time highs, and this broad market rally has been a rising tide that has lifted most boats, but not all. Committing new money to stocks that are hitting all-time highs is difficult to do. Eventually, stocks at all-time highs have to come back down to earth, and I call this stock market gravity. And that's why today we're going to look at two former high flyers that have come back to earth. And I'm talking about Activision Blizzard and Foot Locker. So let's take a look. The stock price of video game publisher Activision has dropped about 50% from the 52-week high for two big reasons. First, the overall video game industry has slowed dramatically in 2019 after blistering growth in the prior several years. Secondly, Activision's product line has been relatively poor at the same time. The result has been sluggish top and bottom line growth trends for the past several quarters, and the stock went into free fall. However, demand appears to be slowing this year after multiple consecutive years of big growth and in the absence of new console launches. But the conditions should get easier next year, and new consoles and cloud gaming platforms will add to the action. As a result, video game demand should ramp back up over the next few quarters. At the same time, Activision's content lineup in the second half of 2019 looks to be much better. The combination should ultimately breathe life back into Activision's financial results and spark a big rebound in ATVI stock. So now let's go to our charts and see what they indicate. We're looking at the 20-year monthly chart on Activision Blizzard, and the symbol is ATVI. For disclosure purposes, I do not hold any shares of Activision Blizzard at this time. And simply looking at the price chart, we had a close at 48.06 with a low here of about 40. But the previous high was way up here over 80. So a very steep drop down to the current level, no matter how you look at it. But the thing that does impress me, at least from the price chart, is that going all the way back to 2000, we have a relatively decent upward trend still intact. Yes, we're below the 50 and 20 EMA, but we're well above the 200. And I think it's going to be setting a base here in this 40 per share area. But let's go take a look at the oscillators. Looking at the MACD, the important thing here is that we are very negative. There's quite a bit of difference between the fast line and the slow line. Both of them have moved below zero. However, going all the way back through the 20 years of this price chart, this is the lowest that the MAC has been. So at least at this point, we're very negative, yet the price chart looks that there's like an overall trend, with the exception that things have sold off in the last year or so. But it does look like the fast line wants to move, say, sideways somewhat, and hopefully is starting to base and bottom in this area here. Looking at the histogram, we can see that the maximum negativity was at that point there, even below that -4 point. But we do have improvement throughout several months here, and we're almost at -2. So you have plenty of notice that this stock is getting stronger as we go along, month by month. Price rate of change is at this point here, maximum negativity at that point there. The fast line did move up toward the slow line, got reflected back, and we are at a pretty negative, say, somewhere around 22, 23 level. However, depending upon what happens with this fast line move here, it could bottom again here and then maybe start to head up. Once that crosses through the slow line, that's another indication that things are improving. Relative strength, a weak 41.34, but at the same time, the bottom was there and we have moved up. So there is strength gaining. Stochastics, same story. Fast lines popped above the slow line, so things are improving. Now, if you go back into history, the fast line and the slow line, they don't hang around at these lows very long. As you can see by that time frame, this time frame, and this time frame. So things could be improving. I still think it's going to take a quarter or two. Moving here into volume, volume's not going to tell us much. There is a drop off here, but that's not unexpected, and that's not a huge negative flag in my opinion. Moving here to the Williams as well, showing that bottom at that point there, and then improvement throughout that time frame there, which is several months. So things are improving. You have plenty of advance notice that Activision Blizzard is repairing. But I think that the Mac with the fast line having such a big difference, let's go back down to that, between the fast line and the slow line, you have plenty of time. So just follow this. Watch and see what the patterns do, what the charts do as well. Conduct your fundamental analysis. Again, be patient. This is something that can be on your radar, and you can watch this and learn the pattern, learn the market, and be ready for when you want to invest if that's what you decide to do. But again, conduct your fundamental analysis. The stock price of athletic footwear retailer Foot Locker has plummeted over the past few weeks thanks to what the market perceived as bad first quarter numbers showing the signs of the trade war. Margins came under pressure in the quarter, and management implied that the pressures would continue as long as trade tariffs remained in place. However, Foot Locker's first quarter numbers may not have been all that bad. Comparable sales rose nearly 5%. Gross margins expanded by 30 basis points, and operating margins fell only 10 basis points. For Foot Locker, these are some of the best numbers it has reported in recent memory. Therefore, once the trade tariff passes, Foot Locker could rebound in a big way. So now let's go to our charts and see what they indicate. We're looking at the 20-year monthly chart on Foot Locker, and as you can see here, the recent close was $40.92 from that high here, which was in the upper 60 per share level, and that dropped quite a bit here in the last, say, 3, 4 months or so. Now, the thing that I like about this, such as Activision Blizzard, is going back to this point here, which was the great financial crisis. There still is a relatively decent upward trend, even with these two downtrends, their current downtrend and then the downtrend in late 2017. So it still does have an upward movement, at least by the price chart. Now, another thing that I like about it is the formation of the MAC. I like this type of formation where you get these maximum negative bounces at some point in time prior to the current time, say here is in late 2017, and then we get a move up, but then we get another downtrend, and the second downtrend brings the price quite a bit below its high, but still the price is above the previous downtrend, and so is the level of both the fast line and the slow line. Now, I'm assuming that this is going to be bottoming pretty soon. I think that's the probability here. So if that is true, then we have a good, strong upward movement in the MAC. And you can see that also in the histogram. Maximum negativity at this point, quite a bit of improvement throughout that time frame, as long as we do bottom here. And I think the probabilities are there. We'll just have to wait and see. Price rate of change, pretty much the same thing there. The fast line is still heading on down, but I think that that's going to stop here pretty soon. And hopefully we'll do some sawtoothing along the bottom as we did say here in that area there. Moving down to the RSI, it is a weak 36.20, but again, positive movement at least since late 2017. Same thing here in the stochastics, and as well, such as with Activision, I don't think it spends too much time down here, as you can see in these previous periods, all of them. They're relatively sharp bottoms and they react quickly. So it's coming on down, the fast line's coming down, the slow line will proceed as well, and then we'll get a bounce and a move up. And so that'll be a sign that things have really changed. Moving into volume looks okay. And then the Williams as well. We've got that bounce here at negative 100, but in the last couple of months we do have some improvement. So we'll just see if that continues to improve throughout the next couple of months or quarters. Back up to the price chart. In my humble opinion, this is another stock to keep on your radar and, as usual, conduct your fundamental analysis. And for today, that's ChewDog Charts. Thank you.